What is going on, guys? Nick here, back with another video. Today I'm going to take a neutral look at SOS stock. I've seen a lot of discussion about them over the past couple of months, so I thought I'd show you guys what I found while doing my due diligence over the past few days. My research making this video came out a lot different than I was expecting, and this is definitely one of the most interesting situations that I've seen going on recently. Okay, so let's start with the basics. What is SOS? So SOS is a Chinese technology company listed on the New York Stock Exchange through an ADS. ADS stands for American Depository Share, and it happens when a U.S. depository bank holds a portion of a non-U.S. company, allowing investors to purchase in the U.S. SOS was previously known as China Rapid Finance and has recently transitioned its business towards cryptocurrency mining. They went public in 2015 before getting SEC approval in April of 2017. At this time, they were actually a peer-to-peer consumer lending service in China. In July 2020, China Rapid Finance rebranded itself to SOS Limited, with the proposed business transition from fintech to emergency rescue services. Then in December 2020, SOS announced its business outlook for 2021. They expected a net revenue growth of 286%, and they planned to pursue an acquisition of a national insurance brokerage agency, enhance its rescue infrastructure network around highway exits, and implement a strategic cooperation partnership with Qingdao West Coast Healthcare Development Group Corporation. But on January 21st of 2020, SOS announced a bigger change to the whole business model. They had entered into a purchasing agreement to acquire just over 15,000 cryptocurrency mining rigs, with 14,000 rigs for Bitcoin with a capacity of 527 petahashes per second, and 14,000 Ethereum rigs with a hash power of 1,056 gigahashes per second. And then on April 20th this year, they purchased another 575 Ethereum rigs that should produce about 400 gigahashes per second. Now, it's very important when determining the profitability and forward growth potential to understanding what mining rigs the company is using. There are two major components to Bitcoin and Ethereum mining that will determine the total revenue and profitability potential of the operation: the computing power and the energy usage. Right now, if you haven't heard, there's a massive computer chip shortage, and this has caused a serious drop in the supply of Bitcoin mining rigs as chip makers have prioritized chips for other products. This big shift has even caused the pricing for used rigs to surge by 50 to 60%. Now, most people already know that there's a finite amount of Bitcoins that will exist. As more and more coins are mined, more computing power is needed to solve the equations required to mine Bitcoin. And as more and more Bitcoins are mined, the capabilities of these older, slower, less efficient rigs decline. Well, this is where things seem just a little odd to me. How did SOS get their hands on all of these rigs even though that there's a massive worldwide shortage? Well, they said they found a company in Shenzhen, China that was selling used rigs. When they entered into the agreement to purchase the rigs, the seller wanted to remain secret. So a shell company was established, HY International Group New York Inc. And this shell company is where the official transaction occurred. So SOS listed in their FAQ that the model of the rigs that they were using were previously used, and that they are of various specifications, and that some of the rigs include components that are similar to those contained in the HY Momentum T2T and the HY A10 Pro. But these aren't branded models, so we don't actually know what mining rigs that they're using for sure. When you go to HY International's website, they seem to have gone through some efforts to make it seem like they legitimately sell mining rigs, even to go so far as to call themselves the world's largest mining machine matchmaker. They listed some rigs that they sell, however, none of them are an exact match with the miners that SOS claims that they purchased. Although it would make sense that the InnoSilicon A10 Pro is the HY A10 Pro. I actually don't see anywhere on the website where you can go and purchase the rigs, and when you go to the Contact Us page, it gives you an option to contact Claire Lowe, an assistant to the CEO, an international phone number, and a Gmail account. The address listed on the bottom of the page, under the banner calling themselves the world's largest mining machine matchmaker, is 40 Wall Street, New York, New York, which is actually the Trump Building in Lower Manhattan. Now, to me, I don't really think that it's a huge deal that they bought the rigs from a shell company to protect whoever the seller is. What makes me a little suspicious, though, is the fact that they went through the effort to build a whole fake website. It just seems to me that they're trying to deceive investors in some way or cover something up, whatever that might be. Now, I really can't be sure who it is that created the website. It's entirely possible that the mystery seller did it, but there's plenty of Reddit threads speculating that SOS may have made it. followed up with plenty of comments refuting those claims with their own analysis of the underlying code. I don't really have the expertise to determine which side is correct about the website analysis, but I do have a hard time thinking of reasons why the mining rig seller, who wants to remain secret, would go through the trouble of making a fake website to appear that they were regularly selling mining rigs. Now, the next thing I took a look at is SOS's own website. Now, keep in mind that before we look at this website, this company went public in 2015 as a Chinese peer-to-peer lending company and then switched to roadside assistance and other services, but has since added cryptocurrency mining. To be perfectly honest, this is the US version of a Chinese company's website, so I really wasn't expecting much. But I really can't figure out any real purpose for this website to even exist other than selling shareholders on the business. It doesn't really seem to have any real functionality besides the ability to post press releases. Now, before I get attacked for being a short shill, which I promise I'm not, I have absolutely no financial position in this company or anything related to it, please just spend a few minutes clicking around and checking it out. There's a link in the description, and if there's something that I'm missing about this, I want you guys to tell me about it so I can correct it. Now, one thing that caught my eye under product services is when you hit the last one, medical apparatus. It just takes you to a blank page, and when you hit the Chinese translated version, the same thing happens. I also noticed on every single page, for example the rescue card page, that I would expect to be able to click to sign up for services from the company's webpage, even if it took me to a page for a service that's only provided in China that I would have absolutely no use for. Instead, it's just a few bullet points with no direction on how to sign up. It's just a little odd. But either way, the only service that I and probably most interested or current investors that really matters is the Bitcoin mining service. But before I get to that, there's something bigger we need to take a look at first. On February 26th of 2021, Hindenburg Research and Culper Research put out some very serious claims about SOS. In a Twitter thread, Hindenburg Research said that we are short SOS, which we believe to be a China-based shell game, reanimating the corpse of a former Chinese-based company that earlier imploded 90% from its highs. We think that SOS is a $0 stock and has significant regulatory risk. They said that they discovered that SOS's office and headquarters doesn't actually exist, that they visited the address the company listed in its SEC filings and found it was a hotel. A woman working at the hotel said that there were no companies at the location. Now, SOS responded directly to this claim that they were previously located in Suzhou, China, but agreed to relocate to the Qingdao Free Trade Zone. The Free Trade Zone offers a number of government-subsidized benefits and privileges to corporate residents. To take advantage, they allocate a temporary address to each corporate resident during the construction of the resident's permanent address. The address mentioned by Hindenburg is a shared virtual address used by all new residents. Now, I have no idea if this response is true or not because I just don't know enough about the specific local business rules in China. But if there's anybody watching this video who has more information on if this is a common practice or not, please feel free to let us know in the comments. Now, I don't want this video to run on too long and go through every additional allegation, so I'll put a link in the description if you want to read through all of them. To summarize them, they claim that the major announcements related to hiring Dr. Wazhong Yan, their purchase of FXK, a Canadian crypto tech company, and the HY International deal I talked about earlier were all highly suspect for different reasons. Culper Research, the other short seller, tweeted on April 13th of 2021 through a FOIA request that SOS is under active investigation by the SEC. Now, keep in mind that both of these companies open short positions, so they stand to financially benefit if the stock price drops. Let me repeat this. Both Hindenburg and Culper will make money if the stock drops, so it's in their best interest to put this information out there. So we need to make sure that we consider that when looking at these allegations and not just give them the benefit of the doubt. We need to verify that these claims are accurate with additional evidence before we're able to accept them. Now, there was a really good in-depth article on Seeking Alpha by Hoc Analytics that explained that he believed that the Hindenburg and Culper short attacks were overzealous in allegations of fraud. He believes that SOS purchased, received, and installed the mining rigs, but thinks that they might have been second-hand Bitcoin and Ethereum mining rigs, which makes sense when SOS said that the rigs were used. I'll link to this article in the description. He explained that if we give SOS the benefit of the doubt and say that SOS gets all of their miners online at the hash rates that they claim, and that the rigs are running at 100% with no changes in difficulty, which won't happen due to the rising competition, that SOS will mine 851 Bitcoin and just over 11,000 Ethereum in 2021. And at the current price of each coin, that would generate just under $70 million in mining revenue. The article goes on to explain that the cheap hydroelectric energy usage that many have talked about is pretty much in line with both Riot and Marathon Holdings' energy costs. If anything, it might actually be slightly higher. So while some have touted this as a huge advantage versus the North American competitors, this isn't likely to be a huge difference maker. The same article also looked at SOS's mining rig efficiency. He said that when you compare SOS's rigs versus Riot, he estimates that the used rigs are at best a third of the efficiency of the next generation rigs. But it's impossible to verify since SOS hasn't disclosed the specific models that they're using. Riot, for example, is running 11,500 Antminer S19 Pros, which generate at a hash rate of 1.06 exahashes per second. This is nearly double SOS's 14,000 Bitcoin rigs running at 527 petahashes per second. Now this was written before the additional 575 Ethereum rigs were ordered, but one of the reasons why SOS might have gone after Ethereum rigs over Bitcoin right now is that Ethereum requires less computing power to mine. But there's a trade-off because Ethereum coin is currently around $2,300. But if Ethereum continues to rise in price, this could make them a whole lot of money. What really matters though is how much they paid for these rigs, and that hasn't been disclosed yet. Going back to the Hoc Analytics article, his last major point investors should know about is dilution. SOS has continued to issue more and more shares through the exercise of warrants, which decrease the value of all shareholders' holdings. On February 23rd, they filed an F3 that disclosed 24 million warrants to purchase were exercised, which brought the total share count up to just under 1.5 billion shares. Now for the stock analysis portion of this video, here's what I think you need to consider if you're looking at buying SOS stock. If you're buying this company, the first thing that you need to consider, and now I'm not saying this is true or not, I'm just saying to consider it, and I'm sure plenty already holding the stock already have, but the regulatory risks surrounding the information in the short attacks. You need to do your own due diligence and not trust others and look into these for yourself. It's your investment, it's your money. Since the short attack came out, the stock has pretty much stayed in the $4 to $6 range with a few spikes above that. Now there are plenty who have already looked into these claims and see it as blatant stock manipulation. And what I would say to anybody if you already own the stock or if you're interested in buying is to research yourself and weigh those potential risks versus the risks that you're willing to take on for yourself. If by some chance it does turn out to be accurate, these guys are registered in the Grand Caymans, so you likely won't get anything out of a lawsuit. The second thing that I think you need to consider is what is your outlook on Bitcoin. Some people really like the idea of a decentralized cryptocurrency with no centralized bank that's able to influence the value of their money. There are others that think that Bitcoin doesn't have any true value as a currency because of the volatility and lack of current adaptation so far. Again, I say this not to take a side, but to lay out things you need to consider. If Bitcoin's price continues to rise, these guys stand to make a lot of money as long as their equipment is able to continue and keep up. It reminds me of oil companies and how they can do either really well or really struggle because of the price of oil. Okay, so that's the video. Let me know what you guys think in the comments. There is a ton of very passionate SOS stock investors out there who really believe in these guys, and it's going to be pretty interesting to watch the stock going forward. It has definitely been one of the most dramatic stocks that I've ever made a video on yet, with the short attacks and all the drama surrounding it. Again, make sure you manage your risk wisely and know what you're buying first. And as always, thanks for watching.